Okay, it's May 13th, Sunday. It's my birthday. I'm 50 today, so I'm doing a celebratory video. Actually, it's time for video because we've had some moves lately, but I think we're going to get a reversal in what we've had. So let me begin with the dollar index. You can see a daily chart for the dollar index here. Okay, so dollar index gave us a warning that we're going to get a bull move when we broke above this trend line here, and then confirmation up through the 23.6% fib at 90.50. And then the blue 100-day moving average. Again, we were looking for this move, weren't we? So hopefully you remember that we were jumping on this. And if you hadn't got in on the move, this was a nice dip back to the 100-day moving average. We took off to our target, 91.92, which was the Fibonacci and 200-day moving average. Now I was concerned that we were going to turn around here and dip back, but we didn't. Well, this candle really warned me that, wow, this is it. We're going to turn around and reverse back, but we didn't. The next few days we broke through, so we continued higher and we had to reverse out of any shorts into longs and look for the move higher. Now, on Thursday last week, I did warn you that this was getting severely overbought. The dollar was just going a little bit too far. Couldn't suggest a short. There was no big resistance level. You can't just short a market when it's heading higher because it's overbought. And you can see it's been overbought for a couple of weeks. So that does not work. But I can warn you that be careful with longs. We're probably going to enter at least a sideways period. But actually, I now think we're going to start heading lower. This is quite a negative little pattern here. Blue candle, the doji, and the big red candle. So I think we're going to get a decent correction. Now, I do expect us to at least see 91.95, 91.90 in the dollar index. We've got the short-term fib support around 91.70. What you do find when bull markets start, they don't roar ahead. You get big setbacks, and then after the big setbacks, the troughs become less deep. But the first trough usually is quite deep. So it would not surprise me if we break below 70 and come down to 90.65, 90.55, and this should be a golden buying opportunity in the longer term. If I'm wrong, we'll hold sort of 91.90, 91.70, and the bull trend will continue. But honestly, I do really think we're going to break 91.70 and see a serious setback, get rid of some of the weak longs, and then take off. Again, euro, US dollar, I warned that we might at least start to trade sideways on Thursday. It was just a gut feeling, really. I don't know why I picked Thursday. There's no level here. You know, maybe I've missed something. Maybe someone else knows something, but there's no level here that told me we would reverse on Thursday. It was just a bit of a feeling. And if you look at, that's the weekly chart. That you can see that candle there looks quite positive on the weekly chart. The move lower last week and then the close almost unchanged. Anyway, again, we've got a relatively bullish pattern here. So more likely to see a decent recovery in the euro versus the dollar. We do need to unwind this oversold situation. Of course, this is quite a similar mirror image of the dollar index pattern that we've seen. So can we get back up through the 200-day moving average, the red line? I think we probably can. So that coincides with the longer term 23.6% fib at 120.30. If we get up through there, we'll probably stall here, but I wouldn't be surprised at all to see a really good run back up to 122.25, 122.35. This would be the golden selling opportunity if we get that far. And yeah, I actually do think we will. I have to say, a short in the dollar is risky because I do think the longer term trend is bullish, and I hate trading against the trend. But this is what I feel is likely to happen. So if you fancy going for it and you want to try and catch this bounce, it could be worth it. Gold has been just bloody awful, really. It's just gone sideways since January, as you can see very clearly. We had to try and buy it down here at the 23.6% fib and the 200-day moving average, and what is now a lower trend line down at 1301. So we were getting long in the low 1300 area. That did work. It took a while for the position to work. Well, I suppose we did get a bounce to the 1318. We had that as a target. Backwards and forwards, backwards and forwards. Got another chance to buy it down here, I think. Well, that was on Wednesday. And then finally, it took till Friday before we hit my ultimate target, 1325, that mid 1320 area, to take profit on all longs. Well, you know, the levels did work, even though it took all week for them to work. So we were out of any remaining gold longs at 1325. What happens now, really don't know. I mean, it's a horrible chart. This is not a good market to trade. I'm not seeing great opportunities, but at least we made the most of the opportunity that was presented by buying it down there and selling it up there. I wouldn't trade anything in gold other than these levels that we've got. So buying it down in the low 1300s, selling it in the mid 1320 area, and then just wait and see what happens after that. But I mean, direction wise, you can see we're just going sideways, so there's nothing, you can't run a position in this for more than a couple of days. Unfortunately, there are a lot of markets that really don't make any sense, or certainly aren't throwing up any great trading opportunities, or I can't see them. This is the Canadian dollar versus the Canadian, I should say. Just about in a bull trend since September 2017, but impossible to hold along over that period, really, with some very deep setbacks, as you can see. This is really a market that you've got to trade very short term. Head and shoulders pattern there, as you can see, so that would have worked. Anyway, the 500-day moving average seems to have held this time. We've turned lower. You know, we've got some moving averages here, most of which are moving sideways because this market really is just in a sideways trend. I think this is very difficult to trade. You know, if it's working for you and you've got some insight that I'm missing, I'd be grateful for you to tell me. But I'm finding this one a struggle, and many others as well. Okay, so dollar's had a good run against the Japanese yen as well over the last 2 months. Okay, we've got a relatively negative candle here. I'm going to open this up a bit. We've got a relatively negative candle here, but a big, far more negative candle here on Thursday. We've got a potential double top. I think that is probably a good double top just below the 200-day moving average, even though we managed to beat the 500-day moving average. So I think I can argue for lower prices in the dollar yen, at least coming back to 108.73, break below there, completes the double top. So we get down through 108.60, that completes the double top. We've got a little bit of a sell signal. Not a huge setback, but we could drop, you know, another 100 and call it 125 pips, shall we say? So hang on 1 second. Yeah, I just have to think about that. 107.90 would be a good target. I'm going to have to see how this develops. Actually, I don't think we're going to get all the way down to 106.64. I don't think this one will retrace down to the 61.8% fib. Whereas I do think that could happen in the euro dollar and could happen in the dollar index, but we'll have to see. Anyway, if this double top pattern does play out, which I think it will, we will see some moves to the downside in the dollar yen, but I'm not convinced it will be as significant as it. The reversal won't be as significant as it will be in the euro. Okay, and the dollar index. US stock markets are worth a chat. European stock markets have been doing well, pushing higher. They didn't really get walloped earlier in the month or at the end of April when the US markets did get walloped. Anyway, we had this bear trap in the Dow Jones. You can see that we hit the trend line just below the 200-day moving average. Looked like a breakout, but it wasn't. We managed a strong recovery by the close, leaving this blue candle, hanging man, what do they call it, hammer? No good with the names, but anyway, I know what they mean. And of course, we saw the bull trap, the bear trap, and the markets pushed higher since. Now, I thought we were going to stall at this trend line. We did stall at the trend line and then pull back a little bit and then pushed higher again. So a good run. Once we've broken through that trend line, of course, we were going to push up to the 100-day moving average. That's not a surprise. Now that's held. So this is the big one. We've got the April high at 24,809. We've got Friday's high at 24,847. So the question is, do we get through the 100-day moving average this week and continue to push higher? We're getting a little bit overbought, not severely overbought. Although this is enough, you know, if we are in a sideways, this could be the sideways trend that continues for another couple of months. So I would not be at all surprised to see the market turn around and go lower. But I'm going to show you the S&P, which looks more positive. Okay, so short-term chart for the S&P. It's all bunched up at the top of the page, isn't it? Let me just move that down a bit. Now, this, to me, I really thought this was going to hold it. I really thought this 100-day moving average and trend line was going to hold it. We were going to turn around and go lower. That was my worst call for the week as we pushed up straight through that, no problem for the buy signal, and off we go. We got up to 27.32. This does not look negative at all, even though we're getting overbought. So it's a question of whether the Dow Jones holds and pulls the US stock markets lower, or whether it's the S&P that's leading us higher. I've got to say, probably the S&P is leading us higher. And actually, I've been quite indisciplined, and I'm still short in this. I've got a feeling I'm going to take some pain on that, and I'm going to have to get out of that position on Monday. Okay, that's it. Not huge amounts of opportunity, unfortunately, in the markets at the moment. But let's see if that dollar does pull back, because that will give us a real nice swing trade opportunity. If we can get into a long dollar position around the middle of the month, I think we can hold the longs right through the summer.